This is Matt Locke, who works with Dover, Dixon, and Horn. We won't talk about where Mike Parker is today, but Matt is a very skilled tax attorney. We do have a different opinion than what was just stated.
You know, to members, I wouldn't necessarily say it's the most important, and it depends on the nature of the businesses, but especially if you're talking about long-term capital-intensive investment, and especially in cyclical industries, the ability to weather the ups and the downs is important, especially when you have people in house talking about Arkansas essentially double taxing you, where you have your loss, take your loss, and then years down the road come in and finally start making money again and can't offset the lows against the highs. Would I say it's absolutely the most number one issue to affect site location decisions, business expansion decisions? No, but it's a significant one, particularly for a certain sector of capital-intensive, heavy industry, which seems to be an area that's important to the state's economic development.
Okay, one more and I'll stop. I just want to, as you look at our chart, full implementation of the 10-year is going to be about $65 million a year, which is about, at today's rate, if we're doing 180 days, drop to 0.9, it's about a third of a point. So are you telling me you would rather have 10-year NOL carry forward as compared to an additional 0.3 off the top rate?
0.3 off the top individual rate?
Right.
Now you're putting me on the spot there.
That's right.
I'd say probably yes.
You'd say the NOL is for the business community, has more impact than 0.3 off the top rate?
Yes.
Okay.
Stay there, you may have some questions. Representative Dotson, your question for state member?
Actually, it was for the previous.
You want AEDC?
Yeah.
Well, let's see if you got more of that, we'll bring them back to the table. Senator Elliott, your question for the state chamber?
Yes, I think I can extrapolate my answer from what they just said, so I'll just
Okay. Representative Dotson, Johnson?
Thank you, Mr. Chair. So I would struggle with the 5-year NOL in recruiting, as you call it, manufacturing. Those campuses are spending a tremendous amount of money in their startup period, and it'll be over 5 years before they start making money. So I really struggle that it would not be a recruiting benefit for industries to stay in Arkansas, to not relocate, or to come to Arkansas. The business league, we want them to come, we want to grow our economy. And I think this is one thing, 10-year would be the minimum I'd want to consider, but 15 probably sounds better. So I can ask you, can you give me opinion, in 15 years of good NOL carry forward? It seems to be 15, 20 in other states, and that just seems like that's fair.
That would have us sort of right down the fairway. I mean, if you look at the map of all the states where we're at right now, it's us and Rhode Island, which is probably not the company you want to be keeping for your corporate income tax policy. 15 seems reasonable. Honestly, any of the proposals would be better than what we have now.
Right, 5 years is way too short. It just goes away before you know it. And it doesn't mean we'll have to quit keeping two separate NOL carry forwards. It doesn't stop any of that. But still, I think 15 years would be fair. Just kind of on y'all thought.
One other interesting thing, if you don't mind me adding, would be to see what the dynamic revenue scoring is, because especially when you're talking about NOLs, so much of it is speculation about what's going to happen with the business cycle, and just understanding how that modeling was working more would be very interesting.
Thank you, Mr. Chair.
Representative Dawson, you're recognized. And if you would, if AEDC would come back up, he's got a follow-up question for y'all after the state chamber gets through.
basically the same question as I was sitting here thinking about it. Like to get your feedback on it as well. They mentioned that other things besides NOL might be of higher import, particularly tax rate reductions for CIT. Just wanted to have your take on that, and you said you kind of disagreed with that. But if we were to adjust the corporate income tax rate, at what level would that be a more important thing than NOLs, in your opinion?
So if I might unpack that, you know, corporate, as we're dealing with these corporate income tax issues today, it's in a lot of ways sales tax is either taxable or not, and then if it's taxable, there's an exemption or not, and there's a rate. That's pretty much it. Corporate income tax, your tax base, your rate, your apportionment formula, your NOL rules, your credits, all these, it's like a really cold machine. And so what we do with one piece can really affect what we do with what results you get. In terms of the relative issues facing, for a multi-state company, probably the biggest issue is the apportionment formula, which we'll get to later today, and the throwback rule. But then for an in-state company, like let's say you had an in-state manufacturing business that was essentially only doing business within the state, averaging out the NOLs, I mean, if you game it out, so let's say we got the rate down from 6.5% to 5%, you're still going to get double tax when you start making money again if your NOLs expire and you only start making money in year 6 or year 7. In terms of what rate I'd like to see, I'd love to get it down under 5%, but you know, I'm sensitive to, I'd love to get it as low as possible, but I get that we don't have $1 billion to spare here.
Right, but if you were to pick numbers that would seriously impact the competitiveness of Arkansas, or the ability to attract industry growth and make our economy thrive, what percentage of that income tax rate?
I would,
Under 5?
under 5 would be ideal. I would fix apportionment and NOLs before I got into the corporate rate though.
Okay, thank you. And then same question for the, when they're.
Well, hold
at
on.
the proper time.
Before the state chamber gets up, Senator Elliott has a question for us.
Yes, when AEDC testified, they basically said that the NOL is not in the top 5 or 10 reasons a company decides to locate here or not. Do you have information to the contrary that it is?
You know, here we're all, I think to some extent, it's fair to say, dealing with sort of anecdotal information from our experiences, from our conversations.
Are you talking about anecdotal from your experience or from theirs? Because I would assume they have history,
You have-
historical background.
I mean, it's essentially the candidate prospects you talk to. That's right. Can you say the
Do
question?
you have information to the contrary? Have you seen, or can you give us some information about, yes, the NOL is very, very important to whether or not a company locates here, that it is a problem, whereas I'm hearing from the ABC, they're saying it's not even in the top 10 considerations for companies located here. So I'm just trying to get a balance here. You came with the contrary thought about it. So there must be some evidence that companies have said, no, I'm not going to come, I know it's a big problem. So that's what I'm trying to find out.
Mm-hmm. So this is based on my experience talking with a number of large corporate clients, talking with them about what criteria are important to them. It's very industry specific. If it's not a cyclical industry, if you have a company that just makes money year after year, NOLs aren't an issue. And a lot of the companies that EDC attracts, service businesses, et cetera, it's not an issue.
Okay, that's fine. Thank you, Mr.
Thank you, Senator. Representative Dawson, you'll queue back up last. There are no other questions for State Chamber? Thank y'all. AEDC, y'all come back to the table. Representative Dawson has a question. Oh, wait a minute. Senator Irvin, were you slow again? Just come back to the table. You go punch a button, punch it early.
I'm just curious, because I think, you know, when you're talking about the cyclical nature, could you just go through exactly who you're talking about for me?
So let's say we
What
decide
kinds of companies, and what industries are you talking about specifically?
manufacturing, particularly heavy manufacturing,
Okay,
and particularly groups that are locating specifically in Arkansas. Because if you take, again, this gets to this apportionment question, if you take a business that's making investments in all 50 states, the NOLs come in, I believe the NOLs will come into play looking at your investment overall, not just where you are in Arkansas. But if you're in, let's say we start a business doing manufacturing, we open a factory here in Arkansas. We spend $100 million on equipment. We don't start making money until year 6. All the losses that we generated in year 1 are gone in year 6. And so you're effectively going to be double taxed, where for your federal income taxes, those losses that you incurred previously are going to offset your income. For the Arkansas tax purposes, you're going to get taxed on that first dollar that comes in.
right. So I know in manufacturing, is there any other, because I feel like when we talk about business, we kind of have like this filter that we are only talking about manufacturing, whereas there's so many other businesses, you know, I'm concerned about. I mean, I represent rural Arkansas, so, you know, we don't have a lot of manufacturing, but I look at small businesses. I look at, you know, just all your different sectors. And so I know that honestly, we talk about manufacturing all the time, but I'm interested in the other businesses. Can you comment?
It would be effectively any business that is cyclical. Yeah, if you're taking losses, let's say you have a few bad years on the farm. Now, for some small businesses, if you lose money 3 years in a row, you're done. But at least.
So healthcare, agriculture,
Anyone.
anybody. I mean, that's kind of what I'm trying to understand. I mean, that's, you know, I want to be able to have tax codes that are not, I mean, I understand we're going to want to be specific on different areas, but I want to help the vast majority of Arkansans. That's my goal here. So, you know, I need that information from whoever comes and speaks at this table. Don't just talk to me about agriculture. Don't just talk to me about manufacturing. Don't just talk to me about one industry. If you're the chamber, I think you need to represent, you know, everybody as much as possible. So as much information as you can give us, I think is helpful, as who this really is going to affect. Thank you.
Y'all stay seated. Remember, just to let you know, also in your packet with the institutional taxation economic policy, there's a paragraph written on the carryovers, and also the Council on State Taxation. There's also some written material on the net carryovers. Also, we have a resource in the audience, Jared Wolzak with the Tax Foundation. If anybody would like to hear his view, he's available to come up. Let me see. Representative Kavanaugh, you still have a question for the State Chamber?
Thank you. My question is, we're talking about, would we rather reduce the highest rate income tax, or would we rather make our NOL carry 20 years? But really, is it not a combination? Maybe we do an NOL for 10, 15 years, and we still lower that rate, and we get a bigger impact that way. Is that not a better way to think about this? That way we're addressing all industries and all small businesses in the state.
You know, that's a fair question, a tough judgment call there. 10, if we went to 10, would that be much better than where we are today and take away a lot of the pain? Yes, I think so. still be on the low end of states in terms of how generous this is, but it wouldn't be out of the question. And I'm sensitive to that 6.9% rates we all have to, don't get me wrong.
I'm assuming you're saying, yes, that's a better way to approach it, all or none. To approach a combination of both rather than you get all or you get none. Because as a state, we have to make decisions based on impact, because we have bills we have to pay. And so we have to look at those, and so we have to think about combinations of ways that we're able to get the impact that we need for revenue, but also be able to find a way to attract businesses, large and small, to the state.
Yeah, I certainly would like to see, if you ask me would I rather go to 20 versus 15 and have an income tax rate cut, it probably would be 15 with a rate cut. I would be genuinely interested to see how the modeling on this turns out if you do decide to send it forward for dynamic modeling, because there's a lot of complexities here.
Any other questions for the state chamber? Kenny, appreciate y'all. As the AEDC will come to the table, President Dotson has a question for you.
Thank you, Mr. Chair. If you heard the question before, but basically, kind of with regards to what were the other factors that you would rank higher than NOLs, and more specifically, if we were to adjust corporate income tax, what would that level be that would be the most competitive in your opinion?
Absolutely. And I would not disagree with what Representative Kavanaugh said or even what Mr. Fox said about all of the various issues. When you look at taxes in general, that companies will be looking at, both those that are existing in the state, those that are new, those that are manufacturers, those that are service providers, those that are warehousing and distribution companies. There are a number of factors. And I think when you look at the tax structure, you have to look at every component that's involved, including net operating loss. Not to disparage that net operating loss is not an issue, but dealing with the types of questions that we get, the requests for information that we get across all specters of the taxes that we have. We get questions about rates, of course. Sales tax rates are very high. We rank very poorly in most indices. Corporate income tax rates, I believe there are 27 states that have rates that are equal to or higher than us at their highest level. Yet, as our friends from the Tax Foundation reported in their report, we rank 39th overall, which is not good considering some states don't have corporate income taxes. What that takes into account in this ranking is not only the top rate of the taxes, but the numerous number of brackets, the way that wages or the way that income is taxed, whether it's taxed for transactions in the state or outside the state for service providers, whether our state has a 3-factor apportionment formula with double-weighted sales, or another state has a single sales factor, carry forwards, the ability to deduct such things as federal income. There are a lot of factors that go into play. When I say that net operating loss does not rank within the top 5 or so of the issues, I'm taking into account all of the various tax issues that apply to property tax, sales tax, corporate income tax, apportionment, rates, brackets, deductibility, and all of those other issues. And I can't disagree that in times of economic downturn, that a 5-year carry loss forward provision is not sufficient for some of the industries. Again, I'm from South Arkansas. I see this with the timber and wood products industries. A downturn can last decades, if not more, especially if you're a small business provider and you're a startup. The job training rate is tremendous among small business owners. And we know that maybe if they can stick it out a few more years and maintain a loss that would go beyond 5 years, that would be great. We do recognize the fact Rhode Island is the only other state that has a 5-year net operating loss carry forward. There are a couple states that have, I believe, 7 and 10 years, but I think 30 states have a 20-year net operating loss carry forward. So moving the needle upwards, I think, is something to look at. Now, where that lies as far as the criteria, the priorities of all of the various tax issues that this task force has looked at over the past year is really up to you. My purpose is to provide you the factual information that we have received from our contacts. And I've talked with our executive director, Mr. Preston. I've talked with our director of business development. I do the annual reports every year, so I know when a project is lost. I see the reasons why we've lost it. I see the requirements in the request for information. And that operating loss is just, it's not one of those top 5 factors that we see. It is important, of course, to the tax structure. And from a AEDC standpoint, I would encourage you to look at that. I'd also encourage you to look at the apportionment formula and all the other issues that go along with the top tax bracket. And I do agree that probably a compromise, a mix and match of different factors would be the best approach given the dynamic scoring that you will be doing on these issues. But with that said, I'm not so sure on your second question if I could suggest a particular way, because I think it would be very reliant on the dynamic scoring to see how all of the various options would come into play. And for example, what would it take for a 1% reduction coupled with an increase of X number of years in that operating loss to be a zero-sum game? I haven't done any work on that to be able to provide a qualified answer. But again, with all of the various components that go into this, it becomes a pretty complex decision. It's the same decision business owners face every day when they look at their taxes and business inputs.
Thank you.
Members, any other questions? Representative Johnson, you're right.
Thank you, Mr. Chairman. Question's really for y'all there. If we wanted to, if we make a motion today to send one of these forward, or is it we're sending it for dynamic scoring?
Well, here's what I would suggest. If there's 2 motions we can make. We can make a specific motion that we want this to go to a certain rate for certain years. I would not suggest we do that. I think that the proposal needs to be for the first 5 items is that we, if membership so inclined to do so, that we ask for additional and further information and further study on this item, so we have how to look at it for next month. I think that would be the proper motion if that's what.
I mean, I'm kind of torn between 10, 15, and 20 years.
Well, I don't think we need to get specific right now. I think.
Right. So I'll make a motion that we send this for dynamic scoring or
Okay.
consideration.
Further consideration.
Yes, I guess all of them, but it's really the 10, 15, 20.
Right.
But let's send all of them for further consideration. I'll make that motion.
Yeah, and I think that's the proper motion. I just want to say, because there's been several comments about dynamic scoring. You all know we engaged a firm to be able to provide that. We have to have that data until, I think, July the 2nd. And that's why the June meeting is going to be so important, that we begin to have proposals that are refined enough to the point where we can send them something that they can give us dynamic scoring. And we probably will have several alternatives that we will send them to show us what a 10-year combined with a rate reduction and maybe apportionment changes would look like, and run that 2 or 3 different scenarios so that they can come back and say, well, this one clearly gives you the most bang for the buck. So we're not really to the point now to send things to dynamic scoring, but to try to get them to the place in June where we can before July 2nd.